Hello everyone, welcome to another episode of Ask NDB Wealth month-end market update for the month of February. I'm Tavi Shayapa and with me I have my colleague Hani Vijayaratnam to start off today's discussion.
During February, the fixed income market witnessed steep decline in yields across all three tenors where 3, 6 and 12 months declined by 348, 346 and 273 basis points respectively. This decrease was due to heightened demand in auctions driven by a lesser offering size relative to the maturity profile and improved tax revenue collections by the government. In addition, on 7th of February 2024, the Central Bank of Sri Lanka relaxed the restrictions imposed on standing facilities to licensed commercial banks under open market operations, which would have also contributed to this increased demand. Despite continuous decline in yields in the first 3 weeks of the month, the yields marginally increased and stabilized at 9.87%, 9.95% and 10.05% for 3, 6 and 12 months respectively compared to the last week due to slowed demand. Conversely, the Central Bank of Sri Lanka opted not to conduct the bond auction scheduled for the 1st of March 2024 in light of improved revenue collections by the government. However, a relatively large bond auction of 270 billion rupees is scheduled for 12th of March 2024 to be offered across 3, 5 and 8 years. Profit booking was witnessed in the secondary market with liquid maturities such as 2026, 2027 and 2028 witnessing more activities.
The external sector performance statistics for January 2024 recorded an overall widening of the trade deficit compared to $487 million deficit recorded in December 2023. This expansion in the trade deficit was primarily driven by higher import expenditure from both food and non-food consumer goods as well as investment goods with the relaxation of import restrictions in the third quarter of 2023. Thus, import expenditure increased by 6.2% to $1.5 billion in January 2024 compared to $1.4 billion in January 2023. Export earnings also declined marginally by 0.8% to $971 million in January 2024 compared to $978 million in January 2023. Lower exports of garments to major markets and a fall in earnings from mineral exports contributed to the decline in export revenue. Considering the performance of the service sector, earnings from tourism were estimated at $342 million for January 2024, which is the highest monthly value recorded since January 2020. Sri Lanka tourism is set to record a good year, with the country attracting nearly 400,000 tourists in the first 57 days of the year. Workers' remittances amounted to $488 million in January 2024 in comparison to $437 million in January 2023. Since the recovery in 2022, worker remittances have witnessed a broad-based rising trend despite intermittent seasonal fluctuations.
In February, Sri Lanka forwarded a fresh proposal for restructuring to its dollar bond holders, facilitated by its advisor Lazard. An in-principle agreement with the commercial bondholders is necessary for the successful completion of the second review by the International Monetary Fund, anticipated to commence on 7th of March 2024. Sri Lanka is expected to receive $500 million from Asian Development Bank in 2024 based on the progress of policy reforms, of which $200 million will be allocated for the stability in the financial sector, while the remaining sum will be allocated equally between power sector, water sector and to support SMEs. As of 29th of February 2024, the Department of Census and Statistics has reported a deceleration in inflation, dropping to 5.9% in February from 6.4% in January 2024. On a month-on-month basis, inflation remained unchanged with a notable contribution from deflation in the food category.
Gross official reserves including $4.5 billion by end of January 2024, fueled by significant net purchases of foreign exchange from the domestic market by the central bank. The reserve balance includes a $1.4 billion swap facility from the People's Bank of China, which is subject to conditionalities on usability. The Sri Lankan rupee has been appreciating since December 2023, and overall, for the year so far, the rupee appreciated by 4.4%, closing at Rs 310.15 against the US dollar on 29 February 2023. The Colombo Stock Exchange observed slow growth and slight improvement in market sentiment during the month of February 2024, with the all-share price index. The Sri Lankan rupee has been appreciating since December 2023, and overall, for the year so far, the rupee appreciated by 4.4%, closing at Rs 310.15 against the US dollar on 29 February 2024. The Colombo Stock Exchange observed slow growth and slight improvement in market sentiment during the month of February 2024, with the all-share price index improving by 3.3% and the S&P SL20 improving by 4.9% for the period. However, foreign investors continue to be net sellers during this period.
Thank you for joining Ask NDB Wealth.